In this video, we are going to talk about the 10 ways to save money to reach financial freedom. So before starting this video, please like this video and subscribe to our channel for future updates. One condition that many individuals strive for is financial freedom. Many have succeeded and many have failed to do so. Of course, it will take effort and sacrifice to do this. Here's the list of 10 ways to save money to reach financial freedom. So let's start. Number 10. Understand current financial conditions and needs. Knowing your financial situation is the first step toward achieving financial freedom. How much is the fixed income? How much are the regular monthly expenses? And is there any debt? You have not yet attained the idea of financial freedom if your monthly obligations are higher than your monthly income. Decide whether you want to enhance your income or decrease your debt-related obligations in the future. You will be more focused on accomplishing your long-term financial objectives if you are aware of your current financial circumstances and needs. Number 9. Do financial planning carefully. Making cautious financial plans is the next stage. How long a person can achieve financial freedom depends on how effectively they manage their money. Your ability to allocate each spending item wisely is required. What portion, for instance, is set aside to cover daily expenses? What portion is designated for savings and emergency money? And what portion, if any, is used to make installments? That is, set aside 40% of your monthly salary to pay for necessities like food, transportation, power, internet, and other daily costs. Then set aside 30% to settle any remaining obligations or installments. Always make an effort to pay off debts on time to avoid penalties and maintain a decent credit rating. Next, allot 20% to saving and emergency fund creation. The remaining 10% is set aside for doing good deeds like charity or alms. Number 8. Have sufficient savings. To attain the idea of financial freedom, one must save enough money, as these resources will be very helpful in the future. Utilize your bank's auto debit option to make saving money a regular part of your monthly routine. Naturally, it is ideal to set aside more than 20% of your income each month for savings, provided that your basic necessities can still be covered. Establish a saving objective to get ready for a more responsible future, such as paying for the children's education, remodeling a home, purchasing essentials, or engaging in other constructive activities. Number 7. Looking for additional income by doing business. It never hurts to earn extra money from a variety of sources if you have more time and energy. You may, for instance, operate a side business that doesn't conflict with your primary employment. There are many different kinds of side enterprises you can start. Start out by running a tiny side business. You can apply for a business capital loan from a financial service provider like BFI Finance if your company has expanded and needs more capital. A company capital loan need not prevent you from realizing the goal of financial independence. Your goal of financial freedom is still achievable as long as you can manage your business efficiently and make on-time loan payments. Number 6. Invest. You should also make investments that are suited to your risk profile in order to achieve financial freedom. If you're new to investing, start out with low-risk investments like gold or mutual funds. The investment seeks to grow both tangible and intangible assets, as well as financial investments. So, the advantages won't be felt for a few years. Number 5. Pay off debt on time. Debt is acceptable as long as you completely assume responsibility for paying it back in accordance with the nominal value set forth. Debt accumulation would undoubtedly make life feel more challenging and further from this concept of financial freedom. Set a clear target for how much you owe and make adjustments based on your financial situation before taking on debt. The character of excellent relationships between parties will be maintained through timely payment of debts. A low credit score and pending late payment penalties can be avoided if you pay your debts to financial institutions on time. Number 4. Prepare an emergency fund. The distinction between emergency cash and savings should be underlined once more. They each have different objectives, despite the fact that they are both money that are set aside from the monthly income we receive. You should always have emergency funds on hand to cover unforeseen expenses. In other words, emergency reserves are designed to cover unforeseen expenses like paying for daily expenses in the event of a job loss, PHK, or a family member falling ill suddenly. Savings accounts are accounts where money is held in order to finance predetermined circumstances, such as savings for education, money for house improvements, and savings for weddings, among other things. Number 3. Adopt a simple lifestyle. Adopting a modest lifestyle is the last stage in realizing the concept of financial freedom. Avoid being persuaded to live hedonically or beyond your means. A hedonic lifestyle will result in unneeded debt in addition to fast draining your savings or regular income. By actively saving, purchasing frugally, and avoiding debt if you can't pay it off, you can start living simply. So that's how you get utter financial freedom. It is difficult to accomplish. It requires considerable effort and consistency. Have any of the 8 strategies listed above been used? BFI friends, I hope this essay is helpful and that you can all reach the monetary independence you've always desired. Number 2. Learn how to budget. If you don't have a plan for your money, you won't succeed. At the end of each month, you'll instead be left wondering where your money went. That is a formula for financial ruin, not financial independence. Without a budget, it is hard to achieve financial freedom. If you don't direct your money, you'll be left wondering where it went. Before the month starts, assign each dollar a task, and keep tabs on your spending all through it. You can always change the amount in those categories if you routinely overspend or underspend there. Number 1. Be smart about your career choice. Your income is your most important asset for generating wealth, as we previously stated. There are several factors to consider before choosing a career. Avoid remaining at a job that is a dead end, especially if it is unhappy. Find a profession you like that also helps you achieve your financial stability goals so you can take pleasure in the trip. That's it for today. We hope you found our video interesting. If you did, please give it a big thumbs up and share it with others. Also, if you haven't already, please consider subscribing to our channel. Don't forget to turn on the notification bell so you don't miss any of our new uploads. In the end, thanks for watching, and see you next time.